everyone, this is Mayank and welcome back to my channel. So today we will discuss about one particular small cap stock which has very strong fundamentals. They are a very good business and they have a legacy third generation business. So that stock has all the potential to become a good mid cap stock to the list, and if the company performs well in the coming long term, when I say 10-15 years, this might become, or they might become also a very large cap company as well, but that might be again very far fetched, but at least they can become a good mid cap company. So we'll discuss about this particular stock in this video, but this video will be a little longer because we'll go into detail of that analysis, fundamentals, business, technical, everything. So watch the video till the end if you want to get the whole picture. Don't decide anything whether to buy or not to buy by only listening half the video or half the content. So watch till the end. And second thing is that this is not a recommendation, this is my personal opinion and personal research. Please do your own due diligence, due research before making investment. And I'm not saying because something happened in the world, but in general, please do your own research before making any investment. Doesn't mean I create the video, anybody create the video, anybody says you anything. Please do your own research before making any investment, cryptos, real estate, stock, anything. Here's my humble request to all of you. Before I show you that stock, start discussing on that. Please make a note, since I am talking about a stock which can be a very good multi-bagger. It has very strong fundamental, very strong technical. I'm telling you upfront, but that doesn't mean that with the kind of volatility what we have in the market, this stock will not fall. This stock might also correct. This stock might also go down from here. But the good part is that with this kind of stocks, that they fall with the market, but they pull back faster than other stock in the market because of the fundamentals and the kind of brand they have and the kind of business they are. So please don't invest in any stock if you're not in a position where you can consider the volatility in the market. 13th July is a very good, very important date because US Fed will release the data where they will say that whether US market is recession or not. If the US market goes into recession, definitely that will impact the India market as a whole. And any stock, doesn't matter how good they are, SDFC, Unilever, Asian Paints, doesn't matter how good they are, they will have a correction. Even this stock also might have a correction. Since this small cap stock, this might have a bigger correction also. So please behold, if you are in that kind of mindset where you can't take volatility, don't invest at all. But if you are a long-term investor, if you can take that small volatility for a shorter period of time, do consider this stock. Do watch the video till the end so that you can decide whether this stock is good for your investment or not. Now let's jump into the discussion of the stock. The company what we're going to talk about is Amrutanjan Healthcare Limited. So we'll discuss the business, the fundamentals, and then the technical little bit, and this video might go a little longer, so bear with me. And let's talk about Amrutanjan Healthcare, small cap company, 2,347 crores of market cap. Stock P is 35, which is relatively lesser than the median PE. Median PE is what we're seeing over last 5 years, what the PE for the stock. Now ROC is 37.7, is very good. 78 ROE is very good. Best part of the company, they are almost a debt-free company. Their debt to equity ratio is 0.00. The profit is 67.2 crores. So with a debt of less about barely 1 crores, 7.2 crores profit is huge profit. And with such a small size company. Now, very interesting thing you note is this company is 122 years old and they have only a market cap of 2,347 crores. That means they want to stay small in one case, first thing, and they want to focus on what they are good at. They don't want to jump just because of sake of increasing their market cap or selling more things. They want to become profitable and stay concise in their business. Now, one more important thing is they are into a third generation business. So they are, you can see, is currently managed by a third generation of promoters. That means this business has been started by much more older people compared to what these people are right now. So this is the kind of family business which has gone public, and they are running it as a family business which is public, if the name sake of public, but they are running it in a very small, within a very small set of people, and they want to do only things which they are good at. And in some case, this is not a good information because this company might not become a large cap at all. As I told, it's a far-fetched information that they might become large cap. They might not become. If they become, well and good. But the max to max, they can become a mid-cap company. As per whatever you have seen the history, 122 years old company only doing 2,347 crore of market cap. In particular, healthcare segment where companies are only 20 years old company, they are doing 50,000, 10,000, 20,000 crores of market cap. So consider that part also. Like, I'm not saying that they're a bad company. I'm saying that they're not an expansion mode of kind of company as far as the history goes. Okay. Now let's jump into, okay, I'll give you this 5 years P expansion I told you, right? So 5-year P ratio, if you see, this company has 42 median P, where the current P is 35. So that means they're below their 5-year median P. That means it's not a overvalued company from that perspective. Also, they have corrected their for their peak. So if you can see, their peak was around 42, 43. I'm saying not their PE peak. PE peak was almost 52 also in 7th August 2020. So when the market was booming in the August, but average P is 42 and they are below their current median P. So this is a good information. Now let's go back to the quarterly and yearly results. Now quarterly results, I'll not tell you to focus when you talk about a long-term company, because every quarter things might change, but in the longer run things are good, then it's a good company. So if you're swing trader kind of thing, then go for quarterly. But if you are a long-term investment, if you're doing analysis for long-term investment, go for profit and loss, yearly profit and loss. So if you see, their revenue has increased from 99 crores to 406 crores span of 10-11 years. So that means they are growing. Same goes for profit also. They increased profit of 11 crores to 67 crores. So they are slowly and steadily growing company without taking any kind of huge debt or without affecting their profitability. They have in last 10 years, or 11 years, they have never made a single rupee of loss. That means they are very, very focused on profitability rather than focusing on the growth. Stock price CAGR 26%. That means for last 10 years, that means you can double your money almost every 3.5 years. And within a span of 10 years, you might go up to 5x to your investment. Again, this is past 10 years, not future 10 years. So but being aware of a company's past growth also helps a lot. So whenever people say that don't look into past, it's wrong thing. History repeats if the people are good. If the people are bad, or say management is bad, history doesn't repeat. But this management is quite a concise management, as I told you. So history might also repeat. They might stay small but still can give a good return in the span of next 10 years. Let's talk about balance sheet. Reserves has increased to 62, and good part of they have been increasing the reserves. It's not like it's decreased much anywhere. So it's a good part. Borrowings is only 1 crore reserve, so above it was 0. So they have never ever crossed, or never ever take a lot of borrowings. They have already taken a borrowing which can be easily managed, like it's a peanuts for them. Current work is progress 16 crore. That means they are investing expansion, distribution expansion, maybe new factories, but they are spending money where they want to scale up. And that's the reason I told you this company might become mid cap also. Why? Because if you see last 10 to 11 years, they have never ever put this kind of money in expansion. 16 crores they have not invested in last 11 years combined. Let's combine and check. 1 2 3 4 3 7 8 9 and 11 crores. So in the span of last 10 years, they invested only 11 crores for expansion. And this year, one year, they're investing 16 crores in expansion. That means they are now going to expansion business, and they might increase their market cap also if they get a good fruit out of their expansion, like current work in progress investment, what they are doing. So this is an important figure to note. Like it's a very important figure to note. If you see last 10 years, this company has not done this and doing suddenly now. So please keep a note of it. Let's talk about shareholding pattern. Shareholding pattern is 50% they have, and FIIs and DIIs have reduced little bit, but public has increased their holdings. Okay, so 42.23% is public, 6% around with DIIs, and 1.43% with FIIs, which reduced from 1.83 from the previous year. So these are the small fundamental numbers for this. Take what this company does. So let's talk about that. So this company, as I told you, 120 years old company, quietly managed by their family. If you talk about products and all they do, they are into four kind of major products. They are into pain management. Then they are into sanitary pads, women hygiene. They are into some kind of drinks. In drinks, in the sense, health drinks, right? So they are into OTC. OTC is over the counter. So over the counter means you don't need prescription for selling this kind of products. So what is the product in the segment of pain management? As I told you, women's hygiene and packaged fruit drink. Okay. Now they have a 41.1% market share for current year 19, not 2021. In case of head category, so they sell balms and all for pain management in the head. Like if you have pain in the head, you put balm, right? So they into that category. So they have a market share of 41.1% in this particular category, which is their market leader. Then they have a sanitary napkins what they sold by the brand of Comfy. They launched in 2014, and where they have a business of 40 crore right now by 20, and they have a 2% volume market share, and the growth is 35%. That means they are again growing in this sector also. Same goes for their drinks also, which they are also doing good. So they have 80% revenue comes from pain management, 17% comes from women hygiene. and they have a good penetration in the South India and East India, and they have a small penetration in the North and West where they're trying to increase. So the 16 crores might be going into expansion of that, where they are going to establish 5,000 distributors in that particular region. So they're going to expand into West and North and get a lot of market share there. So this again will add to a lot of their market capitalization, where they'll increase their sales, revenue, profit, everything. So this is what this company does. In a brief, if you launch their website, and you'll see that they're into 4 products, as I told you: pain management, head balm, and some body pain and everything. Sorry, rub, cold rub, and all those things. Then women hygiene into sanitary pads, and they have beverages, which Fruitnik and Fruitnik Electro Plus. So very small products, like only 4 products. They don't put head into a lot of things. Important figure to note is what this company's plan is. So I have performance. So if you see financial year 22, they have a growth of 23.9% the gross sales, and their 10.6% growth is profit before tax. Okay. Now from e-commerce, they have a sales of increase of 115%. That means they are focusing a lot on e-commerce sales, and this is also their future plan, where they want to focus a lot on e-commerce sales. They are doing e-commerce sales currently with Amazon. You can buy the product on Amazon, and they say good growth, and this is as I told, their future plans also. Profit after tax is increased by 9.81%. This is a good thing. One very important figure is how do they expense, how do they spend their money. So they spend around 19.6% increase of expense in the case of advertisement. So whenever some companies spend money on advertising, we should see a good return at least on their sales also. So if a company is doing expense on advertising, and if I can see the return, that means this company is doing a good advertising rather than just wasting or burning money on that. To reflect back on this, 19% they spent on, say, advertising, and their sales increased by 23.95%. That means whatever money they're spending, there is a return on that investment or that advertising investment. So that's a very good figure which you can note. Employee expense increased for every other company because of high cost of employments or other high cost of employees. So 15.66% employee benefit expenses increased. Other expenses increased by 41.5%. So other expenses are might be establishing distribution channels or might be packaging and things like that. So if you see OTC division, so over the counter, as I told you, the growth is 20%, where gross sales of Comfy product it has by 27.85%. So they are growing in this segment also. In terms of beverages, which they launched recently, the sales is 91.39%, and sales of Electro Plus has been increased by 136%. So more than double is the growth. These are the new segments. They're not doing a great revenue. If you see, advertising spend only for this segment is 5.57 CR, whereas compared to 3.1 CR last year. But the gross margin improved by 1,131 basis points. That means around 11% they have increased their margin in this particular business. So they are doing very, very good in this particular segment. If you go further, like in the case of their Odyssey division, the core product, the raw material has become cheaper, but the packaging material has increased for them, and packaging material has increased for everyone. This is true story for all the different companies, and there are some good companies in the packaging sector also. If you want me to create a video on those companies, do let me in the comment section. I'll create a video on packaging company which are a good fundamentals as well. So let's discuss more on this. Now advertising spend, they have done 38.53 crores compared to previous year 26.52 crores, where their Comfy advertising spend has become 9.77 compared to 9.77 21 and 7.43, almost double in financial 22. So advertising spend is more on Comfy compared to other products, and they are trying to penetrate more markets. So this is something about the important numbers, financial ratios and everything. Can go back, or I can leave the link in the description, go back and read it and get yourself with all the data figures and everything. But overall, this company has been getting return on the kind of investment they do, and they are also increasing penetration of their market share on those products what they do. So all in all, what I mean is that they are not doing anything that is not making sense for them. They're not just diversifying the product just for the sake of diversifying. They are investing only where they can have a good market share or they can make good profit out of the product. Few important things to note is way forward for them: the expansion, distribution, going global, digital, as I told, Amazon they are selling, growing e-commerce vertical, same thing, and they want to control their cost. These are very, very important things. One important thing I missed, I want to tell this now, is they have a cash conversion cycle is minus 35. So any company which is cash conversion of negative, that means they're getting paid first before even selling the product. That means they don't need to invest a lot of money in production. It's, you can say that you have a product you want to sell, but to manufacture the product you take money first, so that that kind of companies has very good monopoly, you can say, kind of very good relation with their distributors or retailers or wholesalers, where they are getting paid first even if you're selling the product. So normally what happens that whenever you are a manufacturer, you go there, you distributor or retailer or wholesaler, however you market, you put the product on the shelf and you wait for the sale to happen and then you get the money. So that conversion cycle can be 10 days, 20 days, 50 days, 100 days also for some companies. But when a company take money first and give the product after 30 days, that means they can use that money to run the operation. And this is one of the reason why I'm saying this company is very strong, because they have established the relation with their sellers in that particular region where they are dominant. Like for this company, they are dominant south and east right now. So they have that strong relation where they get money first and they get the product first. And this is the reason why one of the reasons why this company is debt free company, because they don't need to invest money in manufacturing or in production. They get that money first. This is very, very important figure to note. We've seen the business, we've seen the fundamentals. Now let's talk about the technical few things. So this graph has been drawn by me before. Now I'll just explain the graph. So you can see this graph, this line. So before this time, this was around September 2021, this was a kind of resistance. And after the stock crossed the resistance, it was getting good rally. And this particular line has become support. So you can see stock is taking support from February till now in this particular line. So this becomes price action for them. So this stock has not crossed this, like this is huge volatility from February, like every stock has plummeted more than 50%, 30%, 40%. This stock also corrected, but it never crossed this line. So this is a very, very strong support for this stock, and the stock has moved up. Now from the medium term, you can see from the current price, you can see a growth of around 19.75% opportunity is there compared to the previous high, and this stock will definitely touch this point, there is no doubt about it. But when there is no confirmation, or no one can even tell exactly also when they will confirm, but the kind of market what we are right now in, hugely volatile market, it can go anywhere, it can even crash more 10-12%, and this stock might also break their support also, that might also happen. But there is a good chance that they will today or tomorrow they will cross this particular your target, 20, around 20%. But time frame is something which nobody can tell you. So if you ask me personally, I'll go, if I invest in this stock, I'll go long term. I'll not put this 20% is my target. I'll go for long term. It's like invest in this stock and forget for next 8 to 10 years. Forget means just keep a track of what the company is doing, but don't plan that you will take this money after this much profit for this kind of company. It's a very strong, fundamentally business driven, family driven business where you can invest and wait for a good return if the company is doing good as they have been done in the past. So this is a good company from that perspective. If you are a fan of getting short-term returns or medium-term returns, then you can keep the target in mind, but time frame is something which you have to decide yourself. This is not something which I can tell you at this point in time. So this was my analysis on the video. If you think this is helpful, this adds a lot of value to your investment and everything, do like the video, do share with your friends and family, and let me know in the comment section if you have any feedback for me or any on this talk. I'll reply on that if I have something to reply. Thanks so much for watching. Stay happy, stay safe. We'll talk about some other stock in some other video.